So today we are going to see the one of the methods of investing in stock market using the PE, price to earnings ratio, we can call it. So what is its formula? How we have to calculate? PE ratio is the stock price divided by earnings per share. See what is the earnings per share? I will come in detail later. So you have to see the determine the PE value. You have to divide the stock price by earnings per share, that is EPS. EPS can be given in two ways, that is trailing 12 months represents the company's performance over the last 12 months, and another is found in earnings releases, that is the company will declare the results. At that time they will given the forecast, which often provides the EPS guidance. This is company's advice on what it expects in future earnings. These different versions of EPS forms the basis for the trailing PE and forward PE respectively. Forward PE means company will releases at the time of result, it will announce that in future growth it will we will go like this, so that earnings per share will increase, and hence we can arrive at a conclusion. Normally these forward PEs are done by the analysts only. For investing purpose we can take the trailing 12 months EPS. Okay, now we will go to the earnings per share equation. Earnings per share is calculated as net income, also known as profits or earnings, divided by the number of shares available. That is, a more refined calculation adjusts the numerator and denominator for shares that could be created through options, convertible debt, or warrants. The numerator of the equation is also more relevant if it is adjusted for continuing operations. For simplicity, I will say that earnings per share is equal to net income minus dividends, preferred dividends. In the above, I have explained whatever may be net income minus dividends, warrants, whatever may be given by the company. Net income minus preferred dividends divided by the number of shares outstanding. To calculate a company's EPS, the balance sheet, income statement are used to find the period end and number of common shares, dividends paid on preferred stock, and the net income or earnings. It is more accurate to use a weighted average number of common shares over the reporting term, say one quarter, say last quarter, we can say, because the number of shares can change over time. So, understanding the to find the EPS is crucial for evaluating the company's profitability. This, say, if a company declare its results, EPS will be shown in the audited financial balance sheets itself or any other business news channel such as Money Control or Economic Times, etc. So we can take it from there itself, and we need not have to calculate the same what is the EPS, everything we need not worry, because now in the advanced stage everything is readily available in the business news portal itself. So, just for sake of calculations or purpose, for example, say if a share price of a company it is 1600 and the EPS in the portal shown as 12 TTM, that is trailing 12 months. Say for example it is 40. Then the trailing PE is 1600 divided, that is 1600 is the stock price of a company, divided by EPS is 40. So that current PE is 40 times. This shows that company price to earnings is 40 times valued. We can compare this with sector PE also, and we can identify whether it is overvalued or undervalued, or you can identify the company's previous valuation, say for a 3-year period or 5-year period. You can compare the same with the current PE and can arrive at a conclusion whether it is overvalued or undervalued. Say, in the above case, if a company EPS is 40 in the last quarter and the stock price say 1200, then the PE was 30 in the last quarter. So this quarter the PE is 40 and the last quarter the PE is 30. So by comparing these two quarters, we can come to a conclusion that the stock price is overvalued or undervalued. So whenever, if you want to purchase a stock price, low PE is always better, so that it is undervalued in the constant terms, and the sector also we have to see that whether it is undervalued or overvalued, and we have to compare the company's PE itself with the previous quarters, and we have to arrive at a conclusion. We can have a price discovery with this method also. So thank you. In this way, we can make decisions while investing shares of a company. Thank you. Thank you for watching this video.